What is going on? Welcome back to Trending Stocks. Today we're going to talk to you about SoFi. I want to go over some of the current data points, break it down on what's really influencing SoFi today, and go over everything else you need to know. But first, make sure to hit that thumbs up and subscribe. Always greatly appreciate that. And with that said, let's get right to it. So currently SoFi is up 3.94%, a fair amount of volume. So 52.6 million shares being traded, 44 is the average. So a lot of big money really did get into SoFi and just the broader market, right? So there was a lot of rollover optimism from Friday's S&P hitting the record high. Since then, some things have come out, so I wanted to give you a good breakdown of everything. Starting off with Analyst. Funny enough though, I saw on Twitter, someone just said, I cannot wait. And it was actually while SoFi was rallying, but someone said, I cannot wait until a new Analyst rating comes in and it's bearish. I think they're obviously being sarcastic because historically, whenever SoFi does rally, there's always something negative that comes out. And truth be told, that's actually what happened. It shows that it came out 3 days ago, but it just refreshed today. So again, it could have come out after hours Friday, but it does look like Compass Point did give a $4 price target and a sell rating. So in reality, this is very comical how this always does turn out. Giuliano does have a 58% success rating as well. I believe Compass Point previously had a $3 price target, if I remember correctly, but regardless, it was done at $4 for this time around. So yeah, I guess shout out to that individual. I think that they took down their post. I tried to find it again, but shout out to whoever did post that because I kind of found that quite comical. There has been no news from SoFi itself, no SEC filings today. There was a good analyst summary, I guess, posted by Data Driven Investing on Seeking Alpha. And so SoFi will likely beat on revenue and earnings per share in Q4 2023 and fiscal year 2024. So I've talked on quite a few points and I've actually used a lot of his tweets in the past as obviously material, I'm sure you're aware. So I'll link this in the description below if you do want to read all about what his analysis was and everything else. So shorts. So I have been analyzing across the board today what shorts have been doing. And surprisingly, shorts were very doubtful about this rally today. So as you can see, shorts are increasing 414.96 thousand shares. 13.8% of the free float is being shorted, which does work out to be 123.46 million shares overall are being shorted. And as well, looking right here, so the cost to borrow average is 0.86%. So despite everything in the rally and the FOMO and whatever else, shorts were doubtful from the beginning. And you can kind of see from here, so this teal line shows the actual shorts, what they've been doing. So as soon as the market did open, like it started to rally, shorts just easily doubled down. So they increased about 2 million shares straight away, right out the gate, and then they increased it to about 3. Since then, they've returned some, but still, regardless, it's very messed up. So I don't know if this was kind of orchestrated behind the scenes. I do want to play this video near the tail end. It does talk on how there needs to be more fear in the broader market and more of a pullback before a bigger rally. So I think he's referring to more so the Santa rally that did happen in December, the pullback since then, and it clearly isn't that big of a pullback from what he is ideally wanting. So I wanted to bring this up overall though. Technically, looking at the Elliott wave, as I've brought up in the past, it still is below that pivot point. So right here, it does have the pivot point being $8.28. So it did actually have enough to touch that today. So I think the high today was $8.33. But so it had enough to kind of briefly get around this range. But overall, though, there wasn't really any substance really driving the market higher other than just optimism. And so technically, these technicals I have brought up in the past are still holding out to be very true. 828 is going to be that strong pivot point to watch for in the coming days. Looking right here at options, so $11 million in calls being purchased versus 4.14 million in puts. So based on all the options being done, it's kind of 50-50, right? So 50% bearish right now. So oddly enough, people are not really believing this broader rally. And so as of late, near the bottom right here, I did sell some puts. So ideally, when things are at the peak or what you believe to be as the peak, you can always sell covered calls, and then you can always sell puts technically near the bottom. So recently I did sell some puts, $7 strike price for this upcoming Friday, and then $6 ones for the following Friday, just in case there is a tentative sell-off. And as I've said in the past, I like to either collect the premiums or just buy it at those prices, at the strike prices, if it does dip below that. Some people have asked me what strike prices I have been doing because I do weekly options with SoFi, so that's kind of what I've been doing today. Over and above that, of the call options that are being purchased, it is anticipated for it to be above $8.50, and looking at puts, it is anticipated for it to be below $7.50. Some very strong support and resistance points to watch for, so with it at $7.77, very lucky I guess, but it is between this S2 and this S1. So $7.94 as well is a very strong resistance. And then aside from that, $7.15 is going to be that next strong support. So pretty wide gap. So anticipate a hell of a lot of volatility, especially leading up to their upcoming earnings. So like I mentioned, I just want to play one quick video or one quick minute of the video, and then I'll go over some other data points.
Canaccord Genuity Chief Market Strategist Tony Dwyer is with us today. Tony, great to see you. You've done a really nice job of not getting too emotional on either parts of the swing in the past year, I'd argue. What do you make of this last push?
So which market? I think Sarah just did a great job of giving the recap of the Fed policy and the inflation expectations bumping up. But Carl, you know, the Russell 2000, which is up about 2% today, was down 7%. From the peak as the S&P is making a new high. So that broadening, we came into the year thinking it was opposite from where the stage was set for a rally going into the end of October. You were historically overbought. Fed expectations had gotten down to the level that I thought they would be, and that was totally outrageous at the end of the year, or in the third quarter. So at this point, there's such confusion about what the Fed policy is going to be. And as Sarah suggested, it's going to be data driven. We got a lot of data right ahead of us.
And like I mentioned on my video yesterday on some expectations, we have GDP numbers and also PCE coming out this week. So when he's talking on data points, that is key on what the Fed is going to be using as a benchmark, whether they're going to be cutting rates sooner or later. But based on what he's going to be talking on in a second, it's the latter.
But your job is to make a call. I mean, it sounds like you're reticent to make a bold call in either direction.
Well, I'll tell you, over the next 6 to 12 months, we did a study that showed when the percentage of S&P components above the 50-day moving average over the course of 10 days gets to 90%. So you've got the vast majority of stocks in an intermediate term uptrend above the 50-day for more than just a day, for 10 days, every time you've been higher 9 and 12 months later. So that's really the call. The question becomes, where do you get more aggressive in owning those stocks? And that's where we're a little bit dicey near term, where we've had this run up in the S&P 500. We've had this consolidation or intermediate term consolidation and everything else. So we're kind of in this no man's land. And what we need to see is maybe a little bit more fear come into the market to really attack for that 9 to 12 month gain, Carl.
So as backwards as that is, he's anticipating, I guess, a pullback to strengthen the technicals, I assume. And then that's where things will be going up in that 9 to 12 months as what he did state. So interesting mentality. I just wanted to bring that up because that's what a couple of different individuals have cited, just different versions or different wording, I guess, for that. But a couple of things I just wanted to bring up as well. Momentum shows number of retail investors are getting in today. So based on the volume, you do see at the same time retail and big money buying. And looking at stochastic, you do see it at 8, so it is still considered very oversold. And with that deviation, black line above the red, shows a bullish sentiment behind the scenes. These are all of the transactions that have occurred on the secondary market above $100,000. So you do see big money getting involved today. I know in the past I have said the majority of 2024 has been algorithmic trading, so AI just trading in amongst themselves. So sometimes the volume can be misleading, but based on this, it does show that big money is actually getting in. And I'm going to do a dedicated going forward, kind of breaking down on what I'm talking about sometimes. I know I just loosely go over, say, hey, the options, blah, 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 is meaning this. I'm going to go into depth a little bit more because I have had a couple comments asking, for instance, last Friday, how I did know that it was going to close below 750 and why and whatever else. So I'm going to break all that down slowly in each video going forward. So don't forget to hit that thumbs up and subscribe. Give yourself a shout out. Did you buy? Did you sell? Or were you like myself? Did you sell some puts or do any options? Give yourself a shout out. Don't forget to hit that thumbs up and subscribe. And with all that said, appreciate all of you watching.